Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And if you're a regular follower of the market guys, you'll know that I leave my lines on the chart from the previous report so we can see how the forecasts worked out. And this week, we hit on all markets. We were 100% accurate. We hit our targets, and not only did we hit our targets, the markets blew past those targets and are now testing resistance areas that I drew on last week's chart. As I zoom in here, you'll see that the Dow did a great job of rallying. I said early on we would most likely pull back to test support and fill the gap. And look at that, like clockwork. The Dow Jones Industrial Average filled this gap right here that was left back on January 30th. And if you follow along with the gap trading strategies, you'll know that 80% of the time gaps fill, but after they fill, there's an 80% chance that the market will reverse and go the other way. And that's exactly what happened. So the market reversed after filling the gap. And on the way up, we've also left some minor gaps. Now, keep that in mind as I move through this report, because eventually I think we could pull back and fill those gaps, but I don't think we're going to do it next week. In fact, if you look at the candles, we have good, strong candles. And today, as we close the market on June 7th, we have a higher volume bar. And even though this is a long stretch of green, the higher volume bar is telling us that the buyers are still motivated. Now, if you have long positions, you need to move forward with caution because the stochastics are showing overbought and the CCI is also showing overbought, but they're not pulling back yet. So again, keep that in mind because ultimately I think we will pull back. Next week, I think we're going to blow through that resistance. I'm going to erase that because I think we're going to go much higher. And I think we are going to test the ultimate resistance up there at the top, which is up here. So I'm going to extend that out to the right. And then I'm going to draw my forecast line. I think we could continue to move up. And then later in the week, I think we will pull back. All right, it's a little bit opposite of what we saw this week where I said initially we'll pull back and then rally. This one, next week, I think we're going to rally for a good part of the week and then pull back. Now, before I go on to the S&P, I want to show you the weekly candle here for the diamonds. We closed this week with a bullish engulfing pattern. And if you look back in time, every time we had a bullish engulfing pattern in the market, you could see back here we had a bullish engulfing pattern. It rallied. Right here, another one. We see these rallies that follow the bullish engulfing patterns because they are widely followed and the masses move according to the candles. So we're not only seeing a bullish engulfing pattern on the diamonds, but we're seeing it on the spiders as well. I'm going to go to the weekly chart there so you can see. There it is. As I zoom in, there's the weekly candle showing a bullish engulfing pattern. I could look at every weekly chart in every market, and you're going to see bullish engulfing patterns right across the board. Hence the reason why I think we're going to rally across the board as well. This week in the spiders, we hit my target. Actually, we hit the target yesterday on the 6th of June, and we continued higher on higher volume. So I'm going to erase this line right here, which was the previous forecast, and I'm going to draw the new line for next week. I think we're going to go up, and just like the Dow, I think we'll pull back. Now, with the S&P, and inversely related to the spiders, we have the VIX. And I said we would most likely rally initially. We did that on Monday, and then we pulled back just like I forecasted. Now, interesting thing here is that we have a bullish engulfing pattern on the VIX, which sort of throws a wrench into this equation because if we're bullish on the rest of the markets, including the S&P, and the VIX is showing a bullish sign, you would think that's negative for the general markets. And I'm going to move against this bullish engulfing pattern. I think that the VIX is going to continue lower before ultimately bouncing off of this support level that I'm going to leave in place right there. So keep your eye on the VIX, because that most definitely is a leading indicator, but from time to time we have to go with the price action on the underlying market. Now, if we look at the Russell 2000, which is a more broad-based index, we have a good, strong green candle today, and the stochastics and the CCI are both turning higher. So I think next week RUT could go up and break out over that 20-period moving average to fill this gap here. And then I think ultimately the Russell 2000 will hit resistance right there. So I'm going to erase this line from last week, which was 100% spot on with the forecast. I'm going to remove that. I'm going to remove this line just to clean up the charts just a little bit. And I'm going to leave the forecast line in place right there as I drew it, with the target being the resistance point from the high back here on May 21st. Now, if we look at the Qs, ticker symbol QQQ, this more or less represents the Nasdaq market. Again, we hit our target. I said we would pull back. We did that on Monday, Tuesday, Wednesday, Thursday, Friday. We rallied. Look at this. The forecast was that we would go down to test support right here. The low from Monday was exactly on that support line that I drew. It just amazes me sometimes how accurate technical analysis is. We're not right 100% of the time, but we are correct in our forecast the large majority of the time. And for the most part, it's pinpoint accurate, especially when we're setting targets. So I'm going to erase this. Again, we hit our target. And you'll notice that as I erase this right here, there are gaps still above the market right here on the Nasdaq. So that could act as a resistance point right there, but I'm going to draw my resistance from the high back here on the 16th of May. And I think that the Nasdaq will move up early in the week and then pull back as we hit resistance. So that is my forecast for next week's market action. Stay tuned to The Market Guys. If you'd like to learn more about what we do, just go to themarketguys.com. Click on the video tab at the top of the page right there. And I'd like to draw your attention to gap trading right here. That's teaching you the 80% rules that we have for gap trading. And if you look a little bit further down at the bottom, you'll see the breakout patterns that we look for, and you'll also see the engulfing patterns that are at the bottom of the page right here. There we go, at the bottom, engulfing patterns on the left. So I talked about bullish engulfing patterns. You definitely want to review that to get more information about how to trade engulfing patterns and also how to use them as risk management points. So that's it for The Market Guys. Have a great weekend, and we'll talk to you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.